Welcome to the week that was, your shortcut to staying well informed. This week, we're taking a deep dive into what felt like a whirlwind for Bitcoin and the whole crypto market. We saw prices hit new highs, then pull back pretty sharply, and behind the scenes, some major shifts in institutional adoption and regulatory policy.
Indeed. It's been a really fascinating period. Lots of price discovery, but also some, fundamental structural changes happening underneath. We're going to unpack the key events that shaped the market these last few days. Think macroeconomic surprises, big corporate moves, and what it all might mean for where Bitcoin is headed.
Right. So if you've been seeing the headlines and maybe scratching your head about what's really driving the action, well, you're in the right place. Let's try and make sense of this roller coaster week. Okay, so let's kick things off with the big story, the price action. Bitcoin was really charging towards new records early in the week, wasn't it?
Absolutely. There was some serious bullish momentum. Bitcoin hit an intraday peak of $122,321 around Monday. By Wednesday, it actually briefly pushed even higher, hitting a new all-time high of $124,533.
Wow, okay. And the whole market followed.
It did. The total crypto market cap expanded right along with it, hitting a new record over $4.18 trillion by Wednesday. That's, an 84.49% increase year over year? Pretty astonishing.
Felt like a real euphoria setting in.
Yeah, you can definitely feel that sentiment.
But here's where it gets really interesting. That euphoria, that new all-time high.
Yeah.
It didn't last long at all, did it? We saw a pretty sharp reversal. What triggered that pullback? What happened?
Yeah, the mood shifted fast. The main catalyst, really, was the U.S. Producer Price Index, the PPI data for July. It came out on Wednesday. Yeah.
And
it was hotter than expected, much hotter. It jumped 0.9% month over month. The forecast was only 0.2%.
Oh, okay. So inflation running hotter than anticipated.
Exactly. And that really undermined the market's expectation, which was pretty strong, maybe 94% probability just days before that the Federal Reserve would cut interest rates in September.
Right. And the hope for rate cuts had been boosting risk assets, including Bitcoin.
Precisely. That expectation of a more dovish Fed, lower rates coming had been a major tailwind. The hot PPI data just threw cold water on that.
So the market basically reacted to the idea of higher for longer interest rates, makes holding non-yielding assets like Bitcoin less attractive, increases the opportunity cost.
That's the standard interpretation, yes.
Yeah.
Higher rates generally make assets that don't pay interest or dividends relatively less appealing.
But is it really that simple now? Is Bitcoin just acting like another tech stock, totally tied to Fed expectations? Or is that digital gold inflation hedge idea still playing a role somewhere?
That's the million-dollar question, isn't it?
Yeah.
Or maybe the $120,000 question right now. Look, the short-term reaction, absolutely. It behaved like a classic risk asset. It moved with equities, reacted sharply to that macro data. We're seeing a much stronger correlation with things like the NASDAQ lately.
Yes.
So reaction to the PPI definitely shows it's influenced by these broader economic forces right now. But that long-term narrative, the digital gold story, the hedge against currency debasement, that hasn't gone away. It's still a core part of the investment thesis for many. It just seems the short-term price action is more sensitive to macro news right now.
It certainly felt like a jolt. You mentioned this unexpected inflation data led to a massive deleveraging event.
Yeah, huge. Over $1 billion in leveraged positions got wiped out within about 24 hours around Thursday. And the vast majority of that, like $866 million, was from long positions, people betting on prices going up.
Ouch. So a real shakeout. And where did things settle after that?
Well, Bitcoin fell from that peak, obviously, started consolidating, kind of finding a floor around the $118,000 to $119,000 range.
And by Friday, Saturday?
Entered more of a consolidation phase, yeah. Trading mostly between $117,215 and $117,915. Trading volume started to decline a bit, too, as that initial wave of selling pressure eased off.
So what does this whole up and down sequence tell you about Bitcoin's market behavior now? What's the bigger picture here?
I think it shows Bitcoin is, maturing. It's less of this isolated fringe asset and more integrated into the global financial system. Which means, yes, it's now subject to the same big macroeconomic forces, inflation, interest rates, Fed policy that move traditional markets like stocks. It's a pretty significant shift.
But still resilient in some ways, finding that support level.
Yeah, the fact that it absorbed that shock, that massive deleveraging, and then found a consolidation range, it does suggest some underlying resilience despite the obvious volatility.
Okay, so despite that short-term price roller coaster, maybe the bigger underlying story this week was this continued march of institutional adoption. Would you agree with that?
Unquestionably. I mean, the flows into regulated Bitcoin investment products were just remarkable.
Let's talk numbers. BlackRock's ETF, IBIT, that's been a big one.
Huge. By early this week, IBIT alone had already gathered over $86 billion in assets under management, AUM. And by midweek, it hit $89.27 billion.
Incredible growth.
And get this, in just one 24-hour period ending Wednesday, IBIT accounted for $3.61 billion of the total $4.70 billion that flowed into all the U.S. spot Bitcoin ETFs combined.
Wow, so BlackRock is just dominating those flows.
It really highlights the immense and seemingly persistent appetite from institutional players. They're using these regulated ETFs as their main entry point.
And it's not just, typical Wall Street firms. We saw Harvard University's endowment reveal a pretty hefty allocation, too.
Yeah, that was notable. Harvard Management Company, which manages one of the world's largest endowments, disclosed a $117 million stake in BlackRock's IBIT. That's a significant signal from a very traditional, very influential investor.
Speaks volumes.
Yeah.
Okay, so beyond the big funds buying ETFs, what about corporations? Are we seeing more companies putting Bitcoin directly onto their balance sheets, their treasuries?
That's another critical trend that seems to be gathering steam. We saw Japan's Metaplanet, for example, adding more Bitcoin to its treasury. They now hold over 17,500 PTC, and they explicitly said they were inspired by MicroStrategy's playbook.
Ah, MicroStrategy, or Strategy as they're now called. The original corporate HO dealer, they bought more too, right?
They did. Earlier in the week, they picked up another 155 BTC for about $18 million. That brings their total holdings to a staggering 628,946 BTC, which is valued around, $76 billion? That's nearly 3% of all the Bitcoin that will ever exist.
Just incredible. So it feels like more companies are starting to see Bitcoin as a legitimate treasury reserve asset, not just a speculative play.
Exactly. It's becoming a strategic decision. We saw UK gold miner, ECR Minerals, adopt a Bitcoin treasury strategy, and they even call Bitcoin digital gold. That's powerful symbolism coming from a gold miner.
Yeah, that is interesting.
And a Turkish mobility app, Marti Technologies, announced plans to put 20% of its cash reserves into BTC. Even a firm tied to Trump Jr., Thumbs Up Media, raised $50 million specifically for a crypto treasury and mining.
So this isn't just a few isolated cases anymore.
No, it feels like broader corporate confidence is growing. And importantly, these moves take Bitcoin off the liquid market, signaling long-term conviction, which could impact supply dynamics.
And it's not just newcomers. You mentioned established players holding strong too, like SpaceX.
Right. Elon Musk's SpaceX confirmed they haven't sold any of their Bitcoin since 2022. They still hold 8,285 BTC, worth over $1 billion now. That reinforces the conviction narrative.
So you have this picture of institutions and corporations accumulating, but didn't we also see some selling from long-term holders?
We did. There were reports that long-term holders sold about 300,000 BTC back in July. That was actually the largest monthly distribution from that group since 2021.
So how do you square that circle? Big players buying, but some long-term folks selling.
That's what's fascinating. The market absorbed that significant supply from long-term holders and still managed to push to new all-time highs shortly after. To me, that points to really robust underlying demand coming in from these new institutional and corporate buyers. It wasn't just speculative frost pushing prices up. There was real buying pressure absorbing that sell-off.
Any on-chain data backing that up?
Yeah, actually, on-chain data this week showed that the number of whale wallets addresses holding 100 BTC or more hit a new all-time high. Almost 19,000 addresses.
Okay, so the big holders, the whales, are actually accumulating more despite some other long-term holders taking profit.
Exactly. It signals strong conviction from the large, likely more sophisticated holders.
All right, let's pivot to the regulatory and policy side. Washington seemed pretty active this week, too. How is that landscape shaping up? Is it getting clearer, more favorable?
It definitely feels like the U.S. political environment is leaning more favorable for crypto lately. We heard from SEC Commissioner Hester Peirce, crypto mom again this week. She talked about tokenization, digital assets, and retirement plans, basically articulating a more pragmatic stance. And she specifically acknowledged President Trump's executive order aimed at making it easier to include crypto in 401ks.
That could be huge, right? Unlocking retirement funds.
Potentially massive, trillions of dollars in retirement accounts. Reducing regulatory uncertainty around that could be a major catalyst down the road.
But it wasn't all smooth sailing from D.C., was it? There was some confusing communication from the Treasury Department. Caused a bit of a stir.
Ah, yes, that
Right.
definitely caused a stir. On Thursday, Treasury Secretary Scott Bessent initially made a statement that sounded like the government had no plans to make further Bitcoin purchases for its strategic reserve.
And the market reacted badly.
Yeah, it sent a shockwave, definitely contributed to some of the downturn pressure. But then, fairly quickly, he clarified. He said the Treasury was actually exploring budget-neutral options to acquire Bitcoin. And maybe more importantly, he emphasized they would halt the sale of Bitcoin seized by the government, which is estimated at $15–20 billion worth, and put that into the reserve instead.
Okay, so a bit of a flip-flop, or at least confusing messaging.
Exactly. And it really highlighted just how sensitive the market is right now to any policy pronouncements, even subtle shifts in language.
And wasn't there a more concrete legislative proposal related to a strategic reserve?
Yes, Senator Cynthia Lummis introduced her Bitcoin Act. The proposal is pretty interesting. It suggests revaluing the U.S.'s existing gold reserves to current market prices, and then the surplus value created by that revaluation would be transferred to fund Bitcoin purchases for the strategic reserve.
Without new debt or taxes.
Yeah, that's the key part of the proposal, yeah. No new debt, no new taxes. It's a significant legislative push towards legitimizing Bitcoin at the state level, making the U.S. government a holder. It kind of echoes what El Salvador did earlier this week, too, that they passed a law allowing licensed investment banks there to hold Bitcoin and offer crypto services. So you're seeing these moves towards formal integration.
It does feel like the regulatory environment is maturing, maybe moving away from pure uncertainty towards more defined frameworks.
I think so. And related to that, the Federal Reserve actually announced this week it was shutting down its specialized crypto bank supervision program.
Oh, what does that signify?
It seems to suggest a move towards integrating digital assets into the existing regulatory frameworks for banks, rather than keeping them siloed in some special separate oversight body. More normalization.
Right, so overall, maybe a more constructive regulatory picture emerging.
Combined with Trump's generally pro-crypto stance, yeah, the broader regulatory clarity seems to be improving, creating a more favorable tailwind overall.
Okay, beyond price, institutions, and policy, let's talk about the Bitcoin ecosystem itself. The technology, the mining, the actual use cases. What caught your eye this week?
Well, thinking about the long-term health of the network, there were some interesting developments in mining. Jack Dorsey's company, Block, unveiled a new mining rig concept they call the proto-rig. The interesting thing is it's designed with modular components, aiming for a 10-year operational lifespan. The idea is it could cut upgrade costs for miners by maybe 15–20% because you'd swap out components instead of the whole machine.
Longer lasting, more efficient hardware. And US-based.
Yes, a US-based initiative. And we're also seeing reports that major Chinese manufacturers like Bitmain are planning to set up facilities in the US. This points towards a potential geopolitical shift, maybe more domestic manufacturing of mining hardware in the West, which could lead to more stable costs and, supply chain security.
Makes sense. Less reliance on one region. What about using Bitcoin itself? Any progress on making it more practical for, say, payments?
Actually, yes. A significant development was the launch of the first RGB bridge.
RGB bridge, what does that do?
It's a piece of technology that allows Tether USDT, the big stablecoin, to be transferred from the Ethereum network, where it usually resides, onto Bitcoin's Lightning Network.
Whoa, okay. So you can send stable dollars using Bitcoin's fast, cheap Lightning Network.
Exactly. It enhances Bitcoin's utility beyond just being a store of value. It makes it potentially much more practical for fast, low-cost stablecoin transactions.
Yeah.
A big step for Bitcoin as a potential medium of exchange.
That does sound significant for everyday use cases. Speaking of which, we saw some more mainstream adoption announcements too. Blue Origin, Sheets.
Yeah, a couple of notable ones. Jeff Bezos' Blue Origin started accepting crypto payments for space flights. Maybe not an everyday use case for most of us.
Ah, true.
But perhaps more relevant, the U.S. convenience store chain Sheets started offering a 50% discount on daily purchases if you pay with crypto. That's a pretty strong incentive to actually use crypto for everyday stuff.
Definitely grabs attention. But, with more adoption come risks. Were there any reminders this week about the security challenges?
Unfortunately, yes. Stark reminders. There were reports about a really concerning rise in kidnappings targeting Bitcoin holders, apparently linked to data leaks from various sources. It highlights the very real physical security risks.
That's terrifying.
It is. And on the exchange side, a Turkish crypto exchange had to halt withdrawals because of a suspected hack. Losses estimated around $48–50 million. So, yeah, security risks, both physical and digital, remain a major concern.
Crucial reminders for anyone involved in this space. Self-custody, security practices, they're paramount.
Absolutely.
But there was some positive news on the accountability front, wasn't there? Regarding the Terra Luna collapse.
Yes, a significant development there. De Kwon, the founder of Terraform Labs, pleaded guilty in the U.S. to 2 fraud charges related to that massive $40 billion collapse. He agreed to forfeit over $19 million. It signals increasing accountability for bad actors in the space, which is ultimately crucial for building long-term trust.
Good to see some consequences.
And on a related note, there was the successful unmasking of a 19-year-old who apparently stole $243 million in Bitcoin through social engineering. It shows that on-chain forensics are getting more sophisticated, making it harder to get away with crypto crime.
Okay, so let's try and tie all this together. We've covered the price swings, the institutional buying, the policy shifts, the ecosystem evolution. What does it all mean for Bitcoin looking ahead? How is this asset class changing?
Well, stepping back, if you connect all these dots, Bitcoin is clearly maturing. It's becoming a much more complex asset. There's even a growing debate now about whether Bitcoin's traditional 4-year halving cycle, the programmed reduction in new supply, is still the main driver of its price.
Because institutional money and ETFs are changing the game.
Exactly. With so much institutional capital involved now and these massive ETF flows, the market dynamics are fundamentally different than they were in previous cycles. It suggests that future price models might need to look beyond just the supply shocks from halving. We probably need a more holistic view that includes macroeconomics, regulatory changes, institutional strategies, the whole picture.
Less about its internal code, more about its place in the world.
Something like that, yeah. It's becoming less of an isolated phenomenon and more integrated into the global financial landscape.
Fascinating shift. Okay, so for our listeners trying to navigate this, what are the key takeaways from this packed week? And what should they be keeping an eye on next?
Well, on the positive side, the market did hold above some key technical levels during that pullback. The on-chain support for short-term holders, around $107,000, held firm. That's constructive. It suggests the dip might have been more of a healthy correction, a shakeout, rather than the start of a deeper crash.
But there's resistance ahead.
Definitely. Analysts are pointing to the next major resistance hurdles around $127,000, and then beyond that, the $144,000 region. Those will be key levels to watch.
And what are the main drivers to watch in the coming days and weeks? What could push us towards those levels or back down?
Honestly, the Federal Reserve's policy path still feels like the dominant driver right now. So keep a very close eye on upcoming U.S. economic data, particularly jobs reports, and of course, inflation numbers like CPI and PPI. Any surprises there will likely move the market significantly.
And the EPF flows?
Absolutely. Keep watching the daily Bitcoin ETF flows. They're probably the best real-time indicator we have for institutional sentiment and demand. Big inflow days tend to support price. Big outflow days put pressure on it.
And any more noise out of Washington?
For sure. Any further clarification or, heaven forbid, more confusion from the US Treasury or the White House about that strategic Bitcoin reserve idea, that will almost certainly have an immediate and potentially major impact. Really, that whole $120,000 level has become a critical battleground, both technically and psychologically.
What a week indeed. New highs, sharp drops, Fed worries, corporate buying sprees, policy twists. It really underscores how Bitcoin is getting woven into the fabric of the global financial system, doesn't it?
It really does. It's a clear signal, I think, that Bitcoin is moving beyond being just a niche asset. It's responding to this complex blend of traditional financial forces and its own crypto-native dynamics. It's evolving right in front of us.
So as we wrap up the week that was, here's a thought to leave you with. As Bitcoin becomes more intertwined with global macro trends and big institutional decisions, how much of its original decentralized sort of anti-establishment ethos will remain, and what new kinds of value might emerge as it continues this evolution into a complex global asset? Definitely something to mull over.
Indeed. Until next time, stay well informed, everyone. And remember, in this fast-moving space, critical thinking is absolutely essential.